Okay, we're in the live educational room, trading and educational room on August 12th, 2014, and it's roughly 2:15 in the afternoon. So we had worked on some patterns this morning. We went over and discussed different levels to watch, and I thought it'd be great just to make a video to show some of the things that we were looking at. So let's take this higher time frame. It's a 2400 tick chart, and it's basically just giving us the waves down. So we want to identify a few things. This is what we were looking at a little earlier for those that were not in. So we were looking at each rally made a lower high, and that told us that the next rally up after a move down was going to potentially put another lower high, because each low has been making lower lows, each high making lower highs, and that's evidence of a trend down. Now we had taken a trade, and the trade we had taken was this move up here, and we caught a profit on the way back down. So this one right here, we went through it. We gave a good spot for the trading room for those who wanted to trade it, and we gave the levels and zones to watch. So what we did was we took the prior swing highs. All right, we took these prior swing highs and we drove down from X down to A, up to D. We also took extension from B down to C, up to D. We also took that A to B and we put in a C to D leg. We also took this swing up here and we put an equivalent swing here. And this one too, you can see this. So what that ended up doing was giving us a zone. In addition to that, we had marked off these swing lows and we drew a horizontal line across, and you could see these are important spots to watch on your chart. The other thing that we looked at was this whole general area here. See this whole area here? Okay, sort of what you could be calling it a value area, where you'd have your range, and then you have your belly, and of where all the action took place. So this is more or less a value area, and you can see it on the price bars, the consolidation. So essentially it gave us a whole zone up here to watch that any move up was expected to have resistance. Now, the purpose for this video also is, in a prior video, we talked about where the market goes in terms of price, but your indicator would go up, right? And then your price would come down and go up again, right? And then your indicator would come down and go up, and that would create this sort of divergence pattern where your oscillator, your MACD, made a lower high and price made a higher high. And that's a filter to help you get into a trade. The other trick, okay, this is what we're going to look at. So keep in mind, this would be considered the higher time frame, and we're going to reduce that chart. And now we're going to look at a 1 minute chart, a much lower time frame. So we felt earlier that if the market moved up into the range, you want to see the first pullback and then go short into the bounce. You could put your risk above. That's the first play. And you can see it tested down and came up and went down again. The second way to look at it would be you're looking for a pattern, a harmonic pattern. As you can see here, you had your X, A, B, C, D, right? Has your little Gartley pattern right here. What I also did was we drew out the fact that possibly you can do something like this and come up to around, say, the 32 to 33 zone and form that butterfly-ish type of pattern also. And that would be a short-term sell for a trade, and it turned back down. The reason I gave that pattern that this could have went up here, if we look again at the higher time frame, This is where the original resistance was, right? So if it came a little bit higher, you see your 32 area, that would be equivalent of what we were just looking at on that smaller chart. So you had to keep an open mind. So if the market did come up or went a little bit higher, you could have expected you would have had some resistance up there. I keep these squiggly lines here. These are what's called a Keltner channel, and that was the upper end of a Keltner channel. So that would have also provided some resistance. Now, after the market turned, you start going into the Elliott wave thinking, where you had a zero, a high, a low, a swing up, and that would be a 0 point. This would be a 1 to 2. This would be a 2 to 3, and this would be a 3 to 4. So this would be 0, 1, 2, 3, and then any back up would be a 4, and then down again for a 5. So you had your short-term reversal, and now you're getting your trend back to the downside. So there's nothing saying that the market's a buy. It's still on this swing down. If we look at the higher time frame here, this is still telling us that the market can still push a bit lower, and you have your range low. So the point of the video was to show you the XABCD stuff that we do in the live trading and educational room, and also how we identify short-term patterns within them, within the higher context of the higher time frame and what we look at. We have other stuff that we look at in terms of the much higher time frames. For example, let me just move this down. All right. So now I bring in a much higher time frame, and here's what we're looking at. Market did an XAB. Now we're looking for the CD to come into this range. So downside potential, which has given us that right here, which has given us that 5 wave down, has a potential downside of 1923 to 1921. And if this holds like that, you could have yourself a buying opportunity. If it breaks, then we have much lower levels to watch. And that's what we look at in our live trading and educational room.